Hello, and welcome back to Explain the Charts. Today, we're analyzing USDCHF, considering recent news and the latest chart data. The Forex Factory news indicates US dollar to Swiss franc support is intact ahead of the Fed and SNB decisions. Also, the SNB is widely expected to cut rates by 25 basis points, taking the benchmark rate to 0%. Let's see how this information correlates with what the charts are saying. Let's start with the daily chart to get a broader perspective. Looking at the daily chart, we can see a downward trend over the past few months. The pair has generally moved from a high around 0.919 in late April 2025 to the current 0.813. We also see it reached some relative lows in early April 2025, around 0.82. It appears there has been some support around the 0.80 level, based on where the candles ended up in early April. The recent daily candles do show a slight upward direction, with higher highs and higher lows, but overall the trend still seems to be downward. Let's zoom in a bit on the last couple of months to see if there's a more clear pattern. This date range will also let us use the 1-hour chart data too, to take a closer look. Okay, looking closer at the last 2 months of daily candles, the support around the 0.80 level becomes even more apparent. We see the price bounce strongly off this level in early April and again in early June. However, the pair has been making lower highs, indicating bearish sentiment. Let's switch to the 1-hour chart to analyze the intraday movements. Now, let's look at the 1-hour chart and narrow in on a recent cluster of candles to check whether we're seeing anything informative. If we narrow in on a 1-day range of 1-hour candles, looking at this range of 1-hour candles, it becomes clear that there wasn't as much volatility as there was general sideways movement. However, that changed sharply around 2300 hours on May 28, 2025, where there was a strong increase in price. However, that movement didn't end up lasting too long. Switching back to the daily chart and considering the news, the expected SNB rate cut could weaken the Swiss franc further, potentially leading to a breakout above resistance levels in the short term. However, any hawkish signals from the Fed could strengthen the US dollar, pushing the pair back down towards support. We would need to see if the USD can be strong enough to break through the support at 0.80, though. For a bullish scenario, watch for a break above 0.82, with confirmation from positive economic data out of the US. A bearish scenario would be reinforced by a strong US dollar and a break below 0.80, potentially targeting 0.78 in the long term. Keep an eye on the upcoming Fed and SNB announcements for any surprises, and of course, thanks for tuning in to Explain the Charts.